Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-hosts. Around the horn we shall travel. Speaking of horns, he knows a lot about horns because he's in Texas a lot. Dwight Millard. Highlands Mortgage. How are you, my friend?
I'm doing fantastic, John. How are you?
You got some big longhorns there every once in a
We
while.
do have some big ones.
Yes, you do. Yes, you do.
I'm doing fantastic. How are you doing?
Very well, other than stupid cold came back, and just bear with me. I was sneezing my head off right before the show, and I'm like, oh, no. But, oh, goodness, this thing just will not go away. But we're hanging tough. Feel fine. Just sound terrible.
They sound fine.
Thank you. Corey Edgevich related. How you doing, Big C?
I'm doing fantastic. Sorry you're not feeling good.
Oh, that's all right. That's all right. No problem. Got the old Clemson paw on the jacket there. I like it.
We're in a rebuilding year. Maybe we're a basketball school now. Who knows?
I like how he so confidently says that, Dwight. We're in rebuilding. Is Davos coming back next year?
I wouldn't think I haven't heard any different. I can't imagine they would fire him, but
all right.
Who knows?
He hasn't done too well, Corey. I mean, as a Clemson boy, I think I'd be a little disappointed with him if I were you.
Well, I mean, let's dial it back a little bit. How many national championships?
Yeah, it's like a stock trade, Corey. You're only as good as your last trade. He's only as good as his last championship.
He might change a little bit. He doesn't like the transfer portal, but he may come around.
Yeah,
we'll see.
Yeah, I know. I'm still waiting for him to announce his retirement like Nick Saban did because of the transfer portal issues. But yeah, it is changed for a lot of coaches. That's for sure. That's for sure. Well, good. Glad to see you sporting the colors. All right, folks, let me tell you what we have lined up for you this afternoon. We got a great show. I don't think we've done this topic in a long time, guys. So, folks, we were sitting back and kind of figuring out, obviously, today's topic. Corey and Dwight mentioned something. I don't remember if it was last Thursday or last Tuesday about, I think you did it, Dwight, about, we're starting to see some delinquencies rising in foreclosures, and they're still not a major issue. But we're starting to see some people falling behind nationwide on mortgage payments. And obviously we've touched for years on falling behind on credit card payments and auto loans and stuff because the consumer is so stretched. So, Corey, I thought about you, based upon that conversation. And I said, you know what, let's do a show today in regards to buying distressed properties. And no one is better at it, in my opinion, than you. And so, as so many people sit back and they go, okay, you know what? I want to get back. I want to get in the real estate game. Maybe you're in it now, but maybe you're just waiting for that absolute perfect time, i.e. you want to go back to an 08, 09 or some of the other periods, or, homes have gone down, foreclosures began to rise. You can get a home, quote, on a fire sale price. But everyone's waiting for this. And they're waiting for it to flood the market like we experienced before, right? As humans, we can remember that. But professionals are not waiting. So folks like Corey, his team, and so on and so forth are looking for distressed properties all day, every day, no matter good market conditions, bad market conditions. So we're talking today about how to buy distressed real estate without foreclosures, where the real opportunity is hiding, how everyday people like you and I can buy properties at a discount before it ever hits where Corey spent a tremendous amount of his time on the courthouse steps. So, Corey, take it away.
I mean, there are distressed properties out there. I just personally listed one, I don't know, a week and a half ago. We'll get into probates and trust sales and all that stuff. But this was a probate property, put it on the market. I'll just give you all the nitty gritty on it.
Sure.
We priced it what we thought was, my opinion, $100,000, maybe $120,000 under market value, but it needs a lot of work, a ton of work. But we had to price it so it was attractive to investors. You got to leave a profit margin for them, kind of all these things. And I see it every single time, Jen. Multiple offers as usual, but people will take that diamond and then want more. I want more. People offering way less than that.
They forget the 150 that you already knocked off the price. Yeah.
No, they don't think that way. And they don't know how to play the game. And we ended up in escrow at well over the asking price, which is what we assumed would happen, and that's kind of how we price those things. But it's we'll get into the details. It's a very competitive market for good reason, and people will pass up a good profit in order to get a great profit, and then they end up never doing anything.
When I wrote the show tease this morning, Corey, and I put in there as far as our podcast title again, how to buy distressed real estate without foreclosure, and I was talking a little bit about the courthouse steps. Did that bring back memories to you when you got my email this morning?
Yeah, it was. We had some great times down there. I was talking to a buddy of mine last week who used to be there with me every single morning. We were talking about what went on last year. I thought he said I don't track it as much as I used to. I thought he said maybe there was about 30 in all of last year that investors bought, where when we were down there, there was 30, 40 per day.
I was
that
going
were
to say
happening.
probably per day. Yep.
It was very, it was a fun time.
Yeah, absolutely. Something that'll definitely go down in the history books. Hopefully, we never have to. That's one of those things in history we don't want to repeat, right, Corey?
Yeah.
Dwight, what's in your opinion right now in regards to what you're seeing as a mortgage banker in regards to distressed properties, around the country, here locally, et cetera?
Well, I mean, what I see is not so much the property being distressed, it's the borrower. I mean, especially, John, if you got into a temporary buy down, and it never really manifested the way you thought it was gonna. It's higher than what you thought. Your payment's not, or whatever, situations come up. But I mean, the good news is right now, unlike what we've experienced in the past with distressed properties, John, is most people should have equity. I know there's some people that just recently bought that could be a little bit upside down in terms of that. But for the most part, you should be able to get out of it. It's not like we lost 165 in a week. So they should be able to get, there are going to be ways, which we're going to talk about, that you can at least start considering. Don't just shotgun it out and be done with it. There's ways to get out of it.
Right. And I want you guys to do this, lay out that sentence of encouragement, because we all know life can happen any moment where things can change. Job loss, loss of the major breadwinner of the family. I mean, you name it, it can happen in life, of course. And so it's not always, oh, geez, I'm just lazy, or I overextended myself. It's right, Corey, like right now, I would imagine, and I'm guessing the answer is you're going to say yes, but I could be wrong, that this is what we're seeing right now. It's the life events, like you said, the death, the divorce, the probate situations, right? These things that are not typically caused just because, again, someone bought $1 million house when they should have bought a $700,000 house and they just couldn't afford the payment. Something in life has happened.
You don't see a lot of people strategically walking away from properties right now because values have stayed elevated and in some places continue to rise. So maybe it catches up. I did catch a headline, I think it was in the Wall Street Journal yesterday or Friday, that they are seeing I call them short sales, they had some fancy term, but people that are underwater on their mortgages start to rise in some of these states, in Texas and other things. And again, that just goes back to the psyche of the owner. I mean, who cares if you're underwater, if you're making your payment and you live your house? It doesn't matter. But some people can't live with that. They have to get rid of it.
Right. Exactly. Yeah, it's a fascinating topic. And again, we've got a lot of steps and strategies and things lined out for you that we'll get to. But first, let me get to the stock market side. We'll get that behind us and then come back fresh right after the break and start getting into the real estate, because we've got a lot of things, like I said, to talk about. All right, how do I summarize today? Once again, somewhat of a lackluster day. We had a hell of a day on Friday. Okay day yesterday, north of 200-point gain on the Dow Jones Industrial Average. We had some momentum. But here's something that I want everybody to be aware of. We have now set records on the Dow for 3 consecutive days. All right. That's like seeing your house go up every single month after month after month. And before you know it, things are going to start slowing down. Things are going to come down. And, obviously we're kind of experiencing that in the real estate. So I want to just give this little bit of cautious. It's great, when we're riding the wave, but you got to be careful and know when to jump off that wave. So it's got me a little concerned. Again, after a big run up on Friday, yesterday was critical, whether we got a follow through from the, massive gain on Friday, 1,000+ points. So a couple hundred points yesterday. Today, just lackluster, just really no conviction. But a lot of this was led to the retail sales numbers, and I want to tell you what happened here. But so let me tell you how we finished. Just a 52-point gain on the Dow. So third consecutive record close. Like I said, 50,188 was our close. Nasdaq, though, not quite so fortunate, down 136. Again, back to the concerns of AI, back to the concerns of software, a lot of areas. So it was one of those days. Closed at 23,109, again, 0.59% loss. S&P down 23 points, 0.33%. Closed at 6,941. And the Russell 2000 down 9 points or 0.35%, closing at 2,679. Now, we turned things over to the Dow side, and like I said, it was on the retail sales. Things kind of changed course. We were doing okay right before, right about an hour or so before they opened. We're kind of flat. Excuse me. Then we got the retail sales numbers come in. Now, this was December's data. Again, we're still playing a lot of catch up from the government shutdown. But the retail sales number unchanged for the month of December, right? So from November to December, it was unchanged. That was prime holiday shopping season. So, Dwight, I'm going to ask you to kind of pick up the mic for a moment as I get a drink of water. So what's your opinion on that?
Yeah, I mean, I saw Corey's reaction. How do you not have different retail sales in December during the? I mean, I did my share. I know Corey did his share. John, you did your share. So I mean, everybody did their share, and I don't understand. It's like beef. They're saying right now beef is the highest it's ever been, right, Corey? But everybody's buying it. So I don't know. Sure. I have a hard time swallowing that December sales number.
Yeah, and I think a lot of it, I didn't listen to any of the commentary today, but I do think there were a lot of people buying prior to the holiday season because they were scared of tariffs and stuff. I don't know how much that played into it, but I'll tell you what, I remember being out in December and the stores and restaurants were packed, and I was out last weekend and the stores and restaurants were still packed. So I don't know. It doesn't seem like it's slowed down to me at all.
Yeah, I mean, I have a hard time buying that one. But I mean, I guess you'll get maybe, do they revise those or do they just go to the next month? I don't think they revise retail sales.
Well, they might. Yeah. I mean, if they have to correct them, they might come out in January or February. I don't know how long it takes them to.
But I would think
numbers,
that would be an encouragement to lower rates, right? I mean, here you go, nobody's spending and all that. I don't know, I don't know the psyche on Wall Street. It's always the opposite of what I think.
Well, we'll just bet against you.
Yeah.
To answer your question, Dwight, no, they don't revise retail sales numbers.
Interesting.
Okay. Yeah.
All right, let's run to break, see if I can regain my voice here. Let's turn over to Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge of Edge Realty to White Millard of Highlands Mortgage. Once again, the Dow finished with a gain of 52. The NASDAQ lost 136, and the S&P 500 down 23. Well, I apologize for my coughing attack. I could not get to my mute button fast enough last segment, so I'm not going to put you through that torture anymore. I'm going to go ahead and step off the show and go drink some hot tea or something, boys. I'm going to pass the baton over to you. I know you guys are more than capable to continue on this great topic, how to buy distressed real estate without foreclosures. So I will see everybody tomorrow. Corey and Dwight, the floor is all yours. Thank you, boys.
Thank you, John.
Get better, buddy.
Feel better.
Thanks. Thank you. Appreciate you.
All right, Corey, it's you and I back to the old days sometimes, right?
Here we
So
go.
one of the things I wanted to cover before we go into this topic, Corey, is that there's a little momentum in the market for the bond. There was some good bond buying today. There was some good bond buying yesterday. So I wanted to quickly just kind of get your opinion, but cover these rates right now. The 30-year fixed rate, according to Mortgage News Daily, Corey, is at 6.11. That's off of, I think 2 weeks ago, we were at 6.2927. So it's a pretty good, it was a 5 basis point movement from 6.16 today. More encouragingly are the government's, Corey, 5.69 on an FHA and 5.70 on a VA. Now this, I do like to always preface, this is the, top of the borrower food chain, and usually comes with at about a point discount on this. Still, the trajectory is what I wanted to kind of point out, is that we've got some momentum going that I think will be helpful, especially if we can get this again back under the 6% on the 30-year, back into a 5 range. Any thoughts on that, Corey?
Yeah, and I think overall, I didn't really watch any of the bonds today, but it seems like overall over the last 6 months at least, things have really just calmed down. You're not seeing swings, you're not seeing craziness. And the bond market, you've said it so many times in the history of however long you've been doing this, 50, 60 years, like what we've seen over the last 5 is unprecedented. And so now you're kind of getting back to normal, which anytime the bond market calms down and the rates calm down, the buyers kind of calm down because they don't feel panicked. And then I think, I might be wrong on this, but it feels like the spread between that 10-year and the mortgage is starting to come back in a little bit. It got pretty wide, but you're starting to get some relief in those rates. And, John's the expert on it, John and Jason, but if the bond market or if the bond rates are coming down, maybe that's indicative of people getting nervous about job losses and layoffs and, kind of that flight to safety again.
Yeah, no, and even the inversion, the curve inversion we had there for a little while, we're back to normal now. It's not inverted. But I think also the other thing too, if you're watching, and I kind of keep different shows on throughout the day, CNBC and different, but there's a strong push from the administration to tout this economic wave that's here and it's coming, right? Or, I don't know if you've been paying attention, watching that, but they're making it, hey, this is going to be the best economy you've ever seen. This is, America is back and America is the great, you know what I'm saying? That's the spin that administration's given. And if people start feeling that, and again, I go back to that kind of that retail sales in December, that would seem very flat to me if it was unchanged from November, which seems very weird to me. I got to believe if that momentum starts to feel, and people, it's all psychological, start to feel that, like you said, their job is safe. You've said it so many times, doesn't matter what interest rates are. They could be 1.5%, but if you're afraid you're not going to have a job, you're not going to buy anything. So I think that if they being the administration, the way that the messaging and the reality, not so much the messaging, but the reality is that if this economy is coming back, rates are going to come down. It's going to improve. Your jobs going to be stronger. I mean, Trump made a pledge. I don't know about the retirement accounts, right? They're going to make them great again or whatever, So I just think that, that might be all helpful. I want more action than words, but I think it'll be a good spring season, a true spring and summer season if we can get this 30-year fixed rate inside of 6, somewhere even in the mid 5s. Because if you get in the mid 5s, Corey, you can buy that down to a 4.9, 4.875 fairly easy. I think when we can get into those range, I think you'd see some activity.
Yeah, and I agree with you. I think you'd see the activity, and I don't know if that will equate to a massive run-up in prices. Hopefully not for the buyers, because they'd finally get some relief on the rate side. I'm still seeing out there, I was out showing properties this weekend, the prices are stable. I'm seeing reductions, I'm seeing open houses, but nothing out of the ordinary. It's just people trying to find that sweet spot, but overall, they're still very elevated from where they were 5-6 years ago. So if prices stayed stable and rates came down, it'd be kind of the best of both worlds for everybody involved.
Well, and you've alluded several times that it has slowed down, but the temperature, the temperament has slowed down. It's not chaotic. You remember you used to have to go, hey, if you want this house, you got to make an offer right now. You have to make it 30 minutes ago. And people just didn't have the bandwidth to kind of process all that. So they were doing it and all of this stuff. So I think that the topic that Jon has created tonight, I think will be encouraging for people who feel like they're in a distressed situation. Hopefully we can take them into that. Again, if it's a life situation, there are ways to get out of life situations. If I kind of wanted to add, it's nothing like we saw in 08, 09, where people had nothing invested in the house and the market crashed. And I mean, at that point in time, you're not going to sit on a ship that's already sunk.
Especially when you've already lost your job.
Yeah.
If the values go down and jobs are being lost, then it's no way.
In the market, stock market, everything, you just saw everything being hit. So this is a good topic, and I'm looking forward to it. We'll get it covered. Right now, let's turn over to Jack Saban. He's got news, traffic, and weather. Hi, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Filling in for Jon tonight and wishing him a very speedy recovery over his cold and cough. But Corey Edge of Edge Realty, Dwight Millard of Highlands Mortgage. All right, Corey, Jon was excited and hoped he could watch, but now he can at least watch us on YouTube and all those various items. But anyhow, buying distressed properties. So talk to us right now about, is the distress there or is it rising? What can people, or if they're looking to take advantage of it, what should they be looking for right now?
There's always pockets of distress. And we should probably start the conversation by, some people they don't like the word distress because it feels like you're taking advantage of people. And that's not what we're talking about here. And I've had clients that I've helped through this. I've been on the other side where I've bought properties that were quote unquote distressed. A lot of time those people need a way out. And so that's the way I look at it, is they need a way out. We can facilitate a way out. Doesn't mean anybody's being taken advantage of if you're dealing with ethical people. And it's a win-win for both sides. So kind of get that from the get-go, that we're not trying to talk about ways to go take advantage of people, because that's not what we do. So parts of the market, there's always a little bit of distress in the market everywhere. Typically divorces, probates, somebody passes away, just different kind of life events that happen that create a distress situation where somebody may need to sell that property for below market value, and they're happy to do it because they need to move on with their life for one reason or another. What we're starting to see is more distress in the mortgage side of it. Not huge by any means, but some pre-foreclosures, which are the notices that go out before the actual foreclosure. We're seeing the actual foreclosures go up a little bit. Like I mentioned earlier, I'm seeing articles on people that are what we call underwater or short sales, meaning they owe more than the mortgage. And again, in comparison to 2008, these are minute numbers, but on a percentage gain, they're rather large because we haven't seen any for a while. So any little jump makes it sound, like a huge thing, even though it's a very small pocket of the market.
Yeah. So when you start to, and the areas that I generally see is you start getting distress, like you said, and people who overbought, second homes, sometimes you can start to see that market. And then, in the rental market, right? Especially if, you gave everything you got a renter, and then they just destroy the property, you don't have the means or the wherewithal to fix it up and things like that, right? So, those are kind of what we say. Maybe it's not so much the borrower's distress, it could be the property, and they just don't have the wherewithal, the bandwidth to fix it or do anything with it. I mean, you and your partners have come up with, you got a great little system that works. You guys buy things and fix them up and do those type of things. So when you start to see, so I guess that's when there is a distressed situation out there, what do you see as the sweet spot from the person looking to get involved in that particular arena? When's the time to actually know?
So there's a couple different kinds of distress, right? Like the personal situations we're talking about, death, divorce, upside down mortgage. Those are kind of property or person specific. The other thing that causes distress is just too many properties on the market. If we get inundated with properties and the supply demand curve kind of inverts itself and now nobody can sell because the prices keep going down, that creates a distressed market. So you kind of got to know which one you're dealing in. And there are parts of the country, believe it or not, that are going through that second part of the stress where you're just seeing too many listings and then it's a race to the bottom. Who can lower their price the fastest? And we've bought and sold in those markets, and it's like catching a falling knife. I mean, you have to understand what you're doing, and you got to be able to take some pain, because if you don't time it right, you're going to get run over by a steamroller. On the other side, for instance, the example I gave earlier, I deal with a lot of properties that are probates, and for whatever reason, these properties aren't in the best condition. The estate doesn't have the funds to put into it to bring it up to market value, so they are willing to part with it at below market value, plus even a little bit below that, because you got to factor in profit margins for the investors and different things. And most of the time they need to get those cleared out. They're not going to give them away for too big of a discount, but they also don't want to sit on them for 2 or 3 years vacant, if you will.
So Corey, let me go on that, because I've got a live situation right now where it's going into probate. There was no will or trust left. Child moved into the property, keep the mortgage payments current. It's got to go to probate. House was in really bad shape. Unfortunately, and this is not every case. The child had to use credit cards to kind of make it livable. But I mean, probate can get very expensive, right? I mean, so if you've got to fix it up and there's things you've got to do, I mean, you got to have the money to do that, right? And you don't own the house yet, so you can't take equity out on it. So
yeah, probate can get pretty complicated. I'm not an attorney, so, talk to a probate attorney for the specifics. But in your example, it sounds like maybe there was one heir, one person that the property potentially was going to be left to. They didn't have to deal with siblings. So you get a little bit more leeway to make decisions with properties and fix them up and what you're going to do. When you have multiple heirs or multiple siblings or multiple people, the situations don't work that well, because they never all want the same thing, especially if one person's going to be moving in. But to answer your question, yes, probates can be very expensive, or they don't have to be that expensive. They can take a super long time, or they can take 6 months.
I think I was going on the probate because most people, if they automatically just are looking now in probate and this is going to be their property, like you said, a lot of them can be in some bad shape, right?
Yes.
So, I mean, that's where, an investor could come in that kind of a situation and relieve that distress from that potential, and again, I don't know the timing of it, but you see where I'm going, because if I'm coming in and I really don't have the wherewithal to take it, I don't want the property. I don't have the money or the means to fix it up. So that's kind of what you're alluding to, right? That may be an opportunity down the line for somebody looking that route.
So there's always pockets where you can go look. So again, going back to kind of John's list, pre-foreclosure. A pre-foreclosure are notices. Notice of default, then it sits for 90 days, followed by a notice of sale. After 30 days on the notice of sale, there'll be a trustee sale. Conversion rate, I would say from notice of default to actual trustee sale is probably only 20-30%. They usually don't, something happens in the middle where the bank decides not to do it or the person makes it up. But these are pre-foreclosure notices. Really want to start digging in, and this is what you really want to do. Those are all public. You can look at them on the recorder site. You can look at them in the newspaper. You can look at them at different aggregators now online. These are not hard to find, but it takes a lot of work and organization to track them through. I've told this story so many times, but when we got into the business and I was kind of on my own before I met my partner, I kept a spreadsheet of, 1,000 properties that I would track through the process, and I would log the date, and I'd wake up every morning and watch it go through until it got to the point where we could actually do something with it, and then we would act on it. So it's a fantastic opportunity if you're not lazy. If you're lazy, it's not for you, because it takes a lot of work to follow these things from start to finish, if you will. But it's there. It's public information for anybody to use.
Right, right. Well, and that's it seems like that, at least in the notes, buyers get better pricing and cleaner deals on that pre-foreclosure. I don't know. I mean, we roll into the 4 biggest sources in this list, and I don't know if you agree, or the hidden distress is, you already mentioned, probate and inherited property, divorce situations. Those aren't really public. I mean, you just got to kind of be word of mouth, right? I mean, you got to know people and talk to people, and you find that out. And then tired landlords, I guess, they're just tired of fixing up the property. And then the last one that was failed or struggling Airbnbs. I don't know anything about that, but what do you think about those final 2, the tired landlords and the struggling Airbnbs?
So tired landlords, sometimes, a lot of times, if the property's cash flowing and they've had it for a while, they're just going to let it keep doing what it's doing. Sometimes you get new landlords that decide halfway through it, like, this is not for me. I don't know what I was thinking. I need to get out of this property. Those are more rare. I don't see that as often. I do sometimes see mispriced landlords where they're running the property on their own. They don't have experience, so they're not maximizing rents. They're not keeping their expenses down. So we could walk in and say, man, this thing is a 5 cap, but we could easily turn it into a 10 cap because we would run it efficiently in the way it's supposed to. So it takes a little homework. The Airbnbs is interesting. I don't know around here what the absorption is, but there are parts of the country where they just got out of hand. Everybody had Airbnbs.
Yeah.
The municipalities were changing the licensing thing. There was not enough vacationers, if you will, coming in to take them down, and so now they're upside down. Take a lot of work. I just want to kind of reiterate, probate and inherited properties and divorce situations, that is all public information. And I'm not going to give out all the specific details here of how to find it, but just rest assured it is all public information. If you're willing to do the work, you can find it. There are lists of those properties out there that you can find. And again, doesn't mean they're all going to be distressed, but maybe 10 or 20% of them are.
Yeah.
And that's kind of the sweet spot. And the information's there if you want to look for it.
Well, we've got one segment to go, and we're going to talk about why sellers would choose to discount a property. But right now, let's turn it over to Kristen Snow in the Right Now Traffic Center. Hi, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780. Here, I'm joined with Corey Edge of Edge Realty, Dwight Willard of Highlands Mortgage, wishing John a very speedy recovery. He'll be back with you tomorrow night. But hey, Corey, in the meantime, your phone number, please. Yeah, and mine, if anybody's looking for that information, is 240-2022. All right, Corey. A few minutes left we have. Let's go through the remaining parts of this distressed sale. So let's talk real quickly why a seller would choose to discount their property.
So when you get into, for instance, the probates and the inherited ones, and we talked about it a little bit, sometimes they're not in the best condition. And so what they're selling it for is what it's worth in that condition. They don't have the funds to do the kitchens, do the bathrooms, do this and that. So they're getting everything out of it that it's probably worth, minus a little bit for profit margins for the investors. And that actually, I deal with a lot of estates. Most of them don't have any funds. Any value they have is in the value of that house. So they need to convert it to cash. So the investors are doing them a favor by doing that. The investor's getting a decent deal that they have the wherewithal to put the money in and flip it and make some money on their own.
Do you have to wait till the probate's completed, Corey? Do you have to wait till it's all the way done? If I had caught you at a restaurant and you're in probate, there's nothing we can do till it's gone through probate proceedings, correct?
No, it's during the probate process. But this is a there's so many different ways it can go, and these are all publicly noticed. There's overbidding situations where more people get to come in and bid on the so it's not as simple as saying, oh, so and so died, I'm going to take that. Like, it's a very structured process, but it does help the estates. I've dealt with a lot of people, Dwight, where the houses, unfortunately, a lot of retirees, they've lost their spouse, the houses are run down. Again, the only assets they have are the value of that house. They can't fix it up. So they are willing to take a discount on the value of the property to get out some cash to move on with their life. It benefits both sides. And so there's a lot of times a seller will take a discount because it's very helpful to the seller and it's also helpful to the person that buys it that can do something with it.
Well, it also, as we talked about off air, it avoids the ultimate foreclosure, and it potentially could save your credit. So if you get into that situation, that's one of the reasons why you would experience that. So real quick on the creative financing, I mean, if you're looking at buying distressed properties, I guess the first thing you got to be careful is that if there's some damage to the home, structural, you're going to have to kind of look at some sort of rehab loan. It's not going to be a traditional Fannie Freddie type of loan. So sometimes you can find some assumables, some wraparound mortgages, things like that, Corey, or even seller carrybacks. Those seem to be kind of pretty clean through that. But a traditional financing, if you find a property and even if you're getting it at a discount, that doesn't mean it's illegal or wrong. You just got it. You've got some instant equity, and you just go through the normal traditional lending process. There is no magic pill in that. But again, if there's some structural, not cosmetic, but structural damages, there may have to be another program we got to look at, like a renovation type of product. So
yeah, and I just want to.
Yeah, go ahead.
I just want to say, just real quick, because we try to be completely blunt and honest with people on the show. If you're in this market and you're going after distressed properties, you have to have cash. Don't waste people's time trying to get a loan, trying to do this, trying to do that. I got an offer last week on one of these, and they said, no, it's private financing, so it's cash. Like, no, that's financing. It's still subject to somebody else's opinion. So you need to find a way to have cash and write a cash offer and show proof of funds. Otherwise, you're just wasting time.
And when you say proof of funds, what you're doing is just you want to see a bank statement, correct? As the seller, yeah.
The buyer's name, LLC, Inc., whatever it is, with the amount of cash to close the deal on a bank statement that is within 30 days, maybe 60 old. You can't send stuff that's 2 years old. I think I told you 2 years ago I had one that this agent, who hopefully doesn't have a license anymore, had forged his client's name onto somebody else's bank statement. So you have to be very careful, but you have to have cash. Don't fool yourself thinking I'm going to get a deal 30% off and I'm going to do a 5% down FHA loan. It's not going to happen.
No, that's perfect. And, we talked earlier about this is not taking advantage of people. This is just trying to help provide solutions. So other than, like you said, cash is a big one. Is there anything else a buyer or investor should be doing right now?
Yeah, I would say, again, just in my opinion, like I talked about earlier, in 2008 and 9, we were inundated with distressed properties. There were too many of them, and you could have your pick. In normal markets like now, there's still an okay amount, but you got to go find them. You got to do the work. You got to do the research. You're going to turn over 1,000 rocks to find one good deal, and that's what you have to do in this business. You have to keep turning over rocks until you find a good one. And if you're not willing to do that work, then this probably isn't the career path for you, I would assume.
Well, you've always said over the years, Corey, if you're willing to put the work in and the time, which you do,
absolutely.
You've done it all these years that I've known you. There is an avenue here to be and you've always been, in my opinion, you've always been the solution. You're not the problem. You're the solution to it. Somebody the problem's already been created. You just come in, and you and your partnerships have always been very good about that. So, well, Corey, we've got about 30 seconds left. Why don't you wrap us up on anything that people should be doing right now?
Just keep digging, and when you find a deal that's a good deal, just buy it. If they're asking a great price, give them a little bit more than what they're asking. Don't kill the things because you just need the last 5 cents.
Great advice. Well, we appreciate you being with us the second half of this program. John will be back with you tomorrow night. This is the Jon Sanchez Show on News Talk 780 KOH. Good night and God bless.
Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.